Hello everyone and welcome back to our mini-series of ESG. Today is the last webinar in this series when we're going to dig into G as in governance. The governance is often seen to be a key value driver for emerging market investing. And to dig deeper into the letter G, I have the pleasure to have Peter Elam Håkansson with me, who is one of the founders behind East Capital. East Capital was founded 25 years ago, but Peter's experience of investing in these sometimes seen as problematic markets is much longer than that. Thank you so much, Peter, for being here with me today, and a warm welcome to you as well.
Thank you.
So we have named this webinar The Power of Knowing Your Owner, and I wanted to dig a little bit into this to start off. I think many people in our industry are well familiar with the concept of KYC, but we have developed something, a concept which we call KYO. Can you please describe this to us?
Yes, thank you. KYC is something we work with on a daily basis. It is key for us and for many other people in the financial industry. But equally important for us is KYO, and it really means know your owner. And we are seeing ourselves as owners rather than investors. So that is a good way to remind ourselves all the time about how it is to be a long-term investor or long-term owner for that matter. And we will explain more about the concept per se.
Thank you, Peter. To start off, can you maybe try to take us back to the time when you started to invest in these markets, what it was back then, and why governance became such a key thing for you when investing?
Yeah. The privatization process in Eastern Europe, which was really the start of East Capital, started already back in 1994, and the company East Capital started in 1997, meaning that everything was new. It was not very transparent who were the owners, and what you really wanted to make sure was that you were investing with the right people, and that you were owning a company together with the right people. You really want, and most importantly, you really wanted to avoid the bad guys. So how did you differentiate the good guys from the bad guys? Well, you went there, you went to see the companies, you went to see the factories, and you sat down with the owners and discussed and tried to assess what type of people are these, and how do they see themselves as owners. And there were so many times that we were really having to explain what is a minority shareholder, what are our targets, why do we only want to own maximum 5% of a company, not more. And we think that we really contributed a lot in these discussions, trying to basically explain the concept. What is the role of the shareholder? What is the role of the management? What is the role of the board? What is the role of the AGM?
But if you compare that to, I think at the time you had some experience of developed market investing as well. Can you try to compare the two, just to get the audience, to give the audience a sense of kind of the key challenges there?
Well, I think the big difference and the big challenge for us was really the lack of transparency. Remember, this was really early days. There was internet was pretty new. It existed, but not everything was on the web, and most of the time we had to go to companies to actually get hold of the annual report and to make sure you actually got to know the people behind the company. And there were so many cases where you realized that when you looked at pieces of research reports, for example, that had been written on the company, definitely were written by someone who had not been to the company and not seen the company. So we just knew that we had to be on the ground, we had to be there. Another sort of very concrete example was really in the beginning there were barter trades between the companies in Russia, for example. So it was, even if you had the annual report in your hand, you couldn't really know if it was valuable to look at it, if the numbers really meant something. So in order to do that, we found out very soon that the way to handle it was to go and see the companies all the time. But really, the timing of the year that really made a difference was in the winter, because then you could see if it was a warm meeting room or a cold meeting room. It really gave you an indication if the company had any cash to spend on something as such so basic as heating. And it was really 100% foolproof method to see if the company was doing well or not.
It sounds like it's really interesting to do this kind of time travel with you, and almost difficult to even understand how it was back then. But I think you really developed a good methodology to kind of get under the hood of these companies and understand what's going on, how they run, etc. So as I mentioned in the beginning, this year in November, we are celebrating 25 years. And we're saying that we've worked 25 years for positive change. What do we actually mean by that when we're saying we work for positive change?
Well, it really means that we want to influence companies in different ways. And we can say that like this: as a fund manager, of course, the starting point is to give good return to our investors. But we also realized very soon that based on our Scandinavian values and view of how a company should work, we could influence much more. And if a company is behaving good, it also influences the country or the environment where it works as well. So as I mentioned, we in many cases were the first investors to actually visit the company, so we could work a lot with just explaining on how good corporate governance should work and how a good corporate citizen should act. And we also very early on saw the value of cooperating with other investors to make sure that we had an even bigger impact than our own ownership level was. So that was key as well, to make sure that companies listen to us. And these days, this is very much how investors work. We work together in different international organizations on trying to have an impact on our ownership. But that's been what we've been doing and had to do it from the start, really. And I think knowing who the other investors or owners are in a company is key. Still, I start when I find an annual report of a company, when I look at it, I always start with a list of the ownership and see who are the other shareholders, who are the other owners.
I think this is extremely interesting, and what we see now and all the moves to kind of work towards a world of net zero emissions, I think this is definitely a key aspect as well, that we can work together to identify targets, etc., to move in the right direction. Some of the audience have probably listened to our previous webinars, and they're well familiar with the fact that we have an internally developed scorecard. We don't really trust ratings from various service providers because we know what it takes to kind of fully understand the company. And in this ESG scorecard, we weigh governance higher than the environmental and social aspects. And we also saying that with a strong G, typically a strong E and S follows. Can you describe that a little bit more in detail, what we mean by that, why that is, and if you have an example, that would be extremely helpful.
Well, from our point of view, it really all starts with the G. And why? Well, it stands for corporate governance, and it really stands for following good rules and the laws that are valid in the company or the country that you're living in or acting in. And we also see that if a company really emphasizes the G, it means that you normally work well with the S and the E as well. And of course, if there is a situation when a company is not following this in a good way, we can always then, as minority shareholders, appoint people to the board that we think would help the company in a better way to develop. And in order to get that to work, you also need to make sure that the G is working in the best possible way. So for us, the G is the start. S and E are, of course, very important as well, but it's really impossible to do this if the G is not working.
So over these 25 years that you have been, or even more than 25 years that you have investing in emerging markets, are there certain kind of sub areas within governance that we actually have seen an improvement within?
Well, we definitely see that there are much better reporting. We see that the transparency is much better. We also see that more of the cash flow is being paid out to the shareholders as dividends. And overall, I think the understanding of the role of a minority shareholder is better over the years. And I think we have done our part, but other investors have done their part. So we see constant change to the better in this area.
I think it's great to hear that things are actually improving and working together is also helping. If we try to look a little bit forward into the future, which are the areas within governance where you would like to see change as soon as possible, and also areas that we prioritize in our engagements on the G?
Maybe surprisingly, where we see the biggest need for change is actually on the board composition. I spoke a lot about that. This is the starting of it all, that we have a good G and everything, and you would expect that the boards have developed over these 25 years, and they definitely have, and they certainly have. But at the same time, the demands on the companies and what we as investors or long-term owners demand from the companies and others as well, especially when you have ESG and SDG and all these things that influence how a company should act. You also see that the quality of the board members become more and more important, and in many situations they actually lack this knowledge that you need. I mean, it's not always certain that you have someone on the board of a company that understands the environmental impact of what's happening in the company, and that is definitely something we would welcome. We also see that still there is not always the right composition of gender in the board as well, and that is also important for us. So I would say that is maybe the most obvious change, and one of the most important changes that still needs to be done, and we would love to see it, of course, happen as soon as possible.
Thank you, Peter. I know from my conversation with Egle on the S, she also discussed the board composition as a kind of key aspect as well. So this is also interesting to see how all the E, S and D, there is a strong kind of interlinkage between the three of them. For those of you who have missed our E and S webinars, they are available, they're recorded, and we're happy to share them. I think you will find them if you go onto our YouTube channel, where you also find loads of other interesting webinars, but otherwise feel free to get in touch with myself or anyone else from the IR team here at East Capital. I think we're going to wrap up this session now, but if you're interested to talk more about governance in emerging market investing with myself or even Peter, we are more than happy to set up individual meetings. So thank you very much for attending today, and I hope to see you soon again.